Hey traders, it's Chris here. So we got another Top Forex trade review for you here. New member here, or not new member, but new entry here. Marius here. He had a great trade on the Kiwi dollar, which has been trending up over the last few weeks. A little bit of a pullback last few days, but he's been taking care of this, or taking advantage of this uptrend. And so he was trading the Kiwi dollar long on the 1 hour chart. And here's his entry, stop loss, and take profit. So we're going to talk about his strategy. We're going to share with you his exact entry, stop loss, and take profit. I'm going to analyze it, and I'm going to give you feedback on things that I think he could have improved upon. So we show you how we teach our members to make money trading and how we can improve your trade performance. So details here on this one here. This is an entry at 62.83. Or 62.28, my bad. Stop loss 62.13. So 15 pips stop loss on this one there. So a lot of you saying, hey, you can't day trade Forex. It's just, it's just not true. Just requires more precision with the entry and the stop loss. So 15 pips stop loss on this one here. He took profit at 63.19. So about a 90 pip target on this one here. Plus our return on this one's 5.95. So for every $1,000 he's risking on this trade, he would have made $5,900 and $50 in profit. Really nice return on this one here. Once you get above 3, it's usually just really strong as a whole, and his holding time was 26 hours, so a little bit more than 2 hours over a day. So pretty much a day trade on this one here. So this is his post here. Let me show you the exact trade from his broker chart, and there it is: entry, stop loss, and take profit. It doesn't even look like he adjusted his trade. I'm guessing this is maybe a set and forget, because the stop loss is where it was originally. So we're going to go over this exact trade on the charts. I'm going to analyze the price action context, show you what's going on in the price action before this that led him to this bullish strategy, and to his trade and his entry and everything like that, and some areas I think he could have improved upon. And so that's pretty much it. Let's get into this. But before we do, go ahead and smash that like button. An alternative is you don't have to smash the like button. You can give it a little love tap. You can just pat it gingerly, whatever it does to hit that like button, and tell YouTube that you appreciate our videos. We appreciate that, and it allows us to keep doing videos, helps us with the YouTube algorithm. So we thank you for that. So let's get into the charts here. Okay, so here we are on TradingView charts, my favorite charts. And here's his entry. Stop loss, really nice and tight on that one here. Take profit. Before we get into analyzing the actual mechanics of the trade, let's look at the price action context leading up to this. So you should see this very clear pattern of price action that we've talked about. One of the first pillars of price action context that we use to analyze price action and determine what is the best trades to take is the impulsive and corrective move. So you can see this is a very clear impulsive move with a corrective pullback, very, very shallow, so very little profit taken from the bulls after this move up, which usually indicates that the next leg is more likely up. And so after a little bit of a building, accumulating, very, very strong impulsive run up. So impulsive, corrective, impulsive series. And then we have this kind of nice little corrective structure here that it forms. And so you can see it's pretty clear, that kind of corrective structure. A little bit more profit taking than this one here, but not a whole lot. And as you can see, the market literally pulled back to this kind of prior high here. So this was the impulsive move. Here's the swing, single tap, double tap, triple tap, a little pullback, another tap. So clearly there are some sellers that are involved in the market here, but they really don't push back. Bulls start accumulating positions and launch a very strong breakout. They break out of this here, find a new swing high, and then double tap on that, and they come right back to this prior resistance, now turn support. So that's called an RRL, or roll reversal level. That's where the roll changes from support to resistance or resistance to support. That's important because it's communicating the order flow behind the market. Hey, the sellers had treated this as resistance, and the bulls did as they tried to break out of it. But now that we're above it, it's now the new floor for the market to climb up. And the market is just saying, hey, look, we came right back to this level, we bought it, and we launch it back up. So we got a little bit wider corrective structure here, but highs are building. So lower highs here, you have lower high, lower high, lower high here, all building. And then eventually it breaks out, and he's just taking this next trade up. He's saying, look, I believe this is the ceiling that will now become the floor. And so now that we've broken out, I'm just going to get in. He's not waiting for a pin bar or some sort of magic candlestick pattern. We don't wait for confirmation. When we have a good read on the price action context and the order flow behind it, we just take the trade. And so it gives us better entries, tighter stop losses. We don't get late into the market. We don't get far away from the institutional players where they're getting in. We're getting in at a premium entry here. So looking at his entry and kind of breaking this down, now you have the understanding and the context behind why he's bullish on this one here. So very straightforward. After a sharp pullback, he just has a limit order to buy, and he chose 62.28, which I think is pretty good level. So, if we look at it right here, let's mark a little line there. And that's pretty much what he's seeing. He sees resistance here, a little bit past it there, but resistance, resistance, resistance. And so he feels like, hey, that's the level I want to get in. And so he just has an order to buy there, and that's pretty much it. And the market pretty much just sticks right there. You can can see this 20 MA, the market is holding it, which is dynamic support. Often is dynamic support in a bullish market. That's what the 20 MA does. And it just kind of holds it, and then eventually it builds a little bit more, and you know, the bulls come in and say, yeah, we believe this is going to long, and then they just launch it higher. And so it pretty much, you know, goes towards its target. You can see again the impulsive corrective structure and then impulsive move to his target. So we had to wait for kind of one leg of this market to kind of pause and then take the next leg up. But you know, here's, as you can see, also the high in this breakout here becomes the next floor on the pullback. So the pattern just continues, and he's just taking this as it moves up. Now, personally, I think he could have done a good job maybe adding onto the position here. He is trading set and forget on this one here. So that's where you get in and you don't make an adjustment to your stop loss or take profit. You just let the market run, and it either hits your target or hits your stop loss, and that's it. And that's what he did on this one here. And so, but he could have added into the position. There's nothing wrong, even if you are trading set and forget, there's nothing wrong with taking a new trade on top of your original trade, as long as your original trade is still set and forget and you maintain your rules of your trading plan. So I would have liked if he had added on to the position here. To be honest, this might have been a tough one to catch because it literally went to the pips. So he would have had to have his thing maybe a couple pips above it, account for the spread and, you know, bid and ask price differences. So that is the one thing I would have liked to see. But in terms of the entry, he pretty much sticks it perfectly here. I mean, literally the market only went a total of, yeah, 7 pips against him. That's some pretty good precision. And with a 90 pip target, I mean, that's really, really impressive. Like just from the maximum deviation against him to his profit target, the market went 12 pips against him, about 90 pips in his favor. That's pretty impressive as a whole. That's almost like a 8R difference from the market going against him. So in terms of the stop loss, he placed it here, and I kind of see why. You know, you want it to be below this candle right here, which is where, you know, the breakout happens. Some people might do it more conservative, and this is where the main thrust is before the breakout. So you could put your stop loss below that. Really conservative traders will put it below this or below this, but then the problem with that is now you're losing a lot of plus R in the trade, and you're losing a lot of profitability just for a very wide stop loss. I think if he had a bigger target, that would have been fine, like a much bigger target, but overall, I think this is really well done. So entry, I give it an A+. Stop loss, super precise on this one here. Nice job. In terms of his target, it seems like he's kind of spotting some sort of resistance here, you know, resistance, a little bit of resistance here. It's kind of like a false break above it here. And so he's kind of targeting, you know, hey, you know, once we get above here, it might, you know, run into some strong selling pressure. Obviously, there was some selling pressure here because it was only there for one candle and it got slammed back down. So when you see things that have quick rejections, that's a lot of force behind it. And I think he was feeling that, hey, once I get up in here, I'm dealing with much more challenging, you know, faster resistance here, basically, that I may not be able to chew through that. So he chose a nice conservative target on this one here. And I think it was nicely done. You know, I would have personally gone for a little bit more, try and catch a little bit more into this penetration, maybe here, because you have this, you know, bottom, then, you know, bottom again, weak bounce, resistance here, and, you know, this kind of candle here. So really, you only have to worry about this wick. And he could have captured a little bit more out of it. And, oh, I just noticed this here. So the market breaks out and pulls back to that floor. So I think that could have been an interesting alternate target. But overall, I think he did a great job on this one here. He's trading it with trend, which is generally what we recommend doing as much as possible. You want to trade with trend. He has a very clear price action series in here, the impulsive corrective series that we talked about. And the market just keeps stepping up. It creates a resistance, which becomes the new floor. Creates a resistance, which becomes the new floor. And he's just trading that. As long as that structure's still in play, you got to keep trading that as much as possible. In fact, when you do see those structures, if you happen to get in early, those kind of, you know, ceilings that become floors, those become good entry points to add into the position, to pyramid into the position, you know, to continue and take advantage of the trade. You know, up to this point, nothing's really shown itself saying, hey, there's a transition in the order flow in the price action. There's distribution from bulls to bears. You know, the market's weakening. It's producing lower highs. We don't see any of that. And so because of that, there's, you know, he's looking at the overall context. He trusts his read. And you can just keep stepping into that. And so I think he did a great job. He withstood this little pullback here. Some traders might have, you know, freaked out on that, panicked that they were losing, you know, maybe half their profits and got out of it and missed the full profit target. No, he traded his trading plan. He was confident. He stuck with it. So congratulations to Marius on this one here. This is your first entry into Top Trader Review. Welcome to the club here, and nice job on this one here. So with that being said, I hope you enjoyed the video. If you'd like to learn more about how we trade and how we teach our traders to make money trading, check us out, secondsguysforex.com. We have tons of free articles and videos for you here, free trading tools, and of course we have some courses to help you, free beginner courses and paid membership courses as well. So lots of free resources to really just help you kind of improve your trading game. And if you don't want to join one of our courses, hey, at least be, you know, a subscriber to our YouTube channel. Helps us out with the YouTube algorithm. You can learn a lot by doing that, and it's going to just continue to build your knowledge base and your skills along the way. And that's our goal, to help you become a profitable trader. So with that being said, I hope you enjoyed the video. I'll look forward to your comments and feedback. I'll see you in the next one.